there's a quite common mistake that we see when we have clients prepare the returns themselves. They come to us and say, hey, I got a notice from the IRS saying I owe this huge tax bill because of some stock transaction. So a common thing that we see is if you own stocks and you sold stocks in a given tax year, the brokerage will issue the statement that tells you what your sales price is for the shares that you sold. And they will usually also report what the cost was. So that when you're filling out your tax return, you can easily calculate what the gain is and you only pay tax on the gain. Now, if there are shares that are really, really old, the brokerage may not have the cost basis reported on the brokerage statement that they're issuing to you. And so it'll only show the amount that you sold it for. So you may not even have a gain on a certain transaction, but the IRS is only getting the sale price of the stock that was sold. Let's say you sold 1,000 shares of Coca-Cola Company and the actual sales price, what you received for selling it, was $100,000. Now you may have paid $90,000 to buy those shares, so your gain is only $10,000. But if the broker is not reporting that $90,000 cost basis on the brokerage statement, the IRS only gets the information that you received $100,000. So a lot of the times clients get notices saying they owe tax on $100,000 and they'll come to us and say, I didn't make $100,000. In this type of situation, we'd like to file an amended tax return to report the cost basis to show the actual gain. So the client pays taxes only on the gain and not the total proceeds received.